Welcome to the Crypto Layer HQ. We have now broken the 74K critical level, which we identified in previous videos. As we can see, this was a major level, as once we broke below and we weren't able to hold it as support, we got a very fast move down all the way to 60K. We had our first negative 10K daily candle we've ever had in the history of Bitcoin. That happened on the 5th of February 2026. Now we're having a big bounce back, but I think the major takeaway was that we broke below this critical level and we approached the 200-week simple moving average, which we also identified in previous videos that we were going to approach and potentially have a sudden move to. If we look at previous cycles, when we broke these critical levels, similarly here, once we broke it, we also had a very fast move, but this time we did go to the 200-week simple moving average and even below it. And the cycle before, something similar happened, that once we broke this major key level, we then ended up at the 200-week simple moving average shortly after. So as we can see, every cycle there are critical levels that once we breach, we almost free fall to the 200-week simple moving average. And this cycle seems to be no different. We weren't able to hold this critical level, and we very quickly moved down almost to the 200-week simple moving average. We didn't reach it just yet. I still think we will eventually get to it later this year. But now, since we had such a fast move all the way down to 60K, which we also mentioned in the last video, that 60K was going to be a big psychological level, as whole numbers are often met as resistance or support, as they're just psychological levels that people see as nice entry points or end up capitulating at. So they end up marking bottoms and lows. Now we can see we're getting a very big bounce. We went from 60K and now we're back at 70K. So what does that mean for the next few months, since we had such a big move? So I think the 74K level is going to stay as a critical level, and we can also mark the 53K as also a critical level, since we were bouncing between 53K and 74K in this region, and you can see it was respected many times. Even last cycle it got rejected here, price also got rejected here, and many times it held as support in early 2021. So I think the 53K and 74K are going to act as major resistance support levels. So we could end up just chopping around here and just getting some sort of time capitulation as people slowly buy into the highs and even sell into the lows, and then just eventually get bored and fed up of crypto in general and Bitcoin, that it's not going anywhere, and people just can't be bothered anymore and start to move to different assets and to stocks and metals, etc. And once that happens, this can often take several months, and then we could eventually get a final capitulation into October or in Q4 of 2026. I think that's a very likely route that plays out. Of course, it's hard to know exactly where we're going to chop around, but I think 74K is definitely a key level to watch, and 53K is a key level to watch now that we broke into this zone. So definitely, if we start to hold above the 74K region sustainably, so if we do manage to get above 74K and start to hold it and potentially have some follow through, I would start to become more bullish, as that would mean, okay, we managed to go back above a critical level, test it a few times potentially as support, and continue higher. But if we do end up rejecting, as I expect we will, and coming lower and just chopping around, and as we get into summer, people just get bored and they're not getting what they want, they'll just slowly start to capitulate and get bored and sell their positions. I don't think this is the low of the cycle. A lot of people did end up, if you're on Twitter and seeing what a lot of people are doing, a lot of people are just buying every time they see a lower price. And I think a lot of people, once they saw the 60K prices, since they hadn't seen that in such a long time, they thought it was a great point to enter, which might of course be the case. But usually when lots of people are buying and entering and thinking it's a very good point in the bear market to enter, it usually isn't. I think where we are right now could be similarly to where we were in this region in mid 2022. So about halfway in the bear market in terms of time, at least. Potentially in price, we could have some more time to go. So if you're thinking, when should I start buying, and did I miss the dip, and should I have bought at 60K, 61K, and so on, and now have I just missed the bear market? Usually bear markets don't happen in one day, and you will have time to enter around these prices. If you're looking at when the earliest time to start DCAing in, I would say May would be a good time to start, since if we look from the top to May, about mid-May, that's 222 days. If we go back to last cycle and we look from the top to here, that was about also 222 days. And this wasn't the low of the cycle, but I think we can all agree, if you started DCAing at 18, 19, 20K for the next 6 to 8 months, you would have gotten a very good entry. And just even if you continue DCAing over the next year, year and a half, you would have been buying in the high teens, and even at the low, and even in the 20s, and then we would have eventually gone into a big bull market in 2024 and 2025. So if we're looking when to start DCAing, I would say mid-May, and when to be done, we could say let's say by end of January. That's 483 days. So if we compare that to last cycle, 483 days, 483 days would take us to this point. So you would have DCA'd from June 2022 all the way to March 2023, and you would have captured this entire price, which would have been the best point to enter in the cycle. I think we're going to get something similar this cycle, that if you're going to start DCAing in mid-May all the way to end of January 2027, over this period here, you're probably going to end up capturing the best prices, and I think you'll have a high likelihood of DCAing at the low. So what could that look like? That could potentially look like we end up chopping around here, this region, and then maybe going a bit lower, capitulating here, going to maybe even 48K, who knows, and then having a base, potentially going back up here, and then hopefully the rest will be history as we go into a bull market in 2027 and 2028. So we could end up having something like this. So if you do end up DCAing from May, you will end up capturing good prices even as we chop. So I would just have a good plan in place and plan to DCA over a good period of time, so that you don't end up buying at local highs and wishing you still had some capital to buy at bottoms. Something interesting about if we do end up bottoming at the 48K region, that would be where the Bitcoin ETFs started trading. They started trading back in January 2024 at 48K. So if Bitcoin does find a bottom at 48K, that would funnily enough be where the ETFs started trading. So that might be a nice region to bottom. And also if we do look at 48K, it is also a major support. If we get rid of these, if we look at 48K, it was where we, let me just adjust that, 48K, it was where we rejected here, and it was respected as support and resistance many times last cycle. We can see it also was respected here. This is where the ETFs opened and started trading. We got very close to it in August 2024. So that could be a point to watch. Also, by then, the 200-week simple moving average, let's say it's around here. Let me change the color so we can see it better. Let's say the 200-week simple moving average will look something like this. And if we're at 48K, that would mean we're trading approximately 28. I mean, let's go with 48K. So that would be trading about 23% under the 200-week simple moving average. If we look back to last cycle and we look from the 200-week simple moving average to where we bottomed, that was 34%. So if you also consider diminishing returns, here we went 34% below it. And then this time we could end up going 23% below it to maybe as much as 28% below it in October or Q4 of 2026. Of course, if the move does continue to go down aggressively, and by early this year we're in the 40s, even though it is earlier than when I would want to start DCAing, if I saw we're in the 40s, I would just consider that as a very good entry point and value for Bitcoin at this point in time, since we've traded in the 40s for an extended period of time last cycle and even this cycle. So the 40s area, I would start to DCA now if we reached it in, let's say, the next couple of months. And I wouldn't wait till May. But my DCA plan would be to start to DCA from that point, wherever we reach the high 40s, to end of 2026 at least. As regardless where we go, I still want to have a good amount of cash to allocate in the second half of 2026, going into Q4 of 2026. I would say at least half of my cash reserves I would want to save up for the second half of 2026. So let's see how things play out. And of course, we'll continue to adjust our plan as the market continues to play out. But I do think we're going to have quite a bit of volatility on both the upside and downside over the next few days. And then eventually over the next few weeks and months, potentially just bore people as we just stay in this region and people eventually capitulate over time and get bored. And once we've convinced everyone that the cycle is over and we're not going into a super cycle, and everyone starts to give up and sell, that would potentially be what marks the bottom.